Good day. This is Al Kleiss with Kleiss Commodity Advisors. I'm joined with Bob Linneman today as we do our weekly Soy Market Watch with the Iowa Soybean Association on Monday, April 28th. And so we certainly have had active markets again last week and so far this week. And so we're going to jump in and look at some of what we recommend that you should consider doing. And at the end, we'll put up our contact information so you can touch base with us if you would like to ask a specific marketing question. Don't hesitate to call or email. Both Bob Letterman and I are Series 3 commodity brokers. Any presentation we do, whether it's a class, seminar, webinar, we need to do what the industry requires us to do, a risk disclosure statement. And the first sentence I think is important to go through. It states that an investment futures contract is speculative, involves a high degree of risk suitable only for persons who can assume the risk of loss in excess of their margin deposit. So that's always very important to know. Past performance does not indicate future results. And then last, the opinions, the last sentence, the last paragraph, opinions expressed herein are the position of the author only and not the opinion of any firm the author may be affiliated or associated with. So again, this is put together by the Kleiss team. Mark Mason, Bob, and I do a lot of the work on this. It does not represent what the FCM we clear through Wedbush would say. So today we're going to go through our market review, kind of look at what happened last week, do our weekly price summary. I know people like to look at what happened last week and then how does that compare to last year. Some of the main factors to watch this week, planning progress update. Bob will be doing a lot on the chart update, and then I'll jump back in for what to do this week. So last week on Monday, we get the crop progress report every day, every Monday at 3 p.m. Central Time. And wow, it showed corn planting ahead of normal, 12%. Iowa had more corn planted than any other state in the nation, jumping to 17%. So that was pretty amazing and fast start. Nationwide, we had about 8% of the beans. That's 3% ahead of the 5-year average. And there too, I think Iowa led the nation, about 14% planted. Certainly led the Corn Belt. Soybean oil rallied, a very impressive rally last week, and we're up again today. And on a chart, it's looked significant to me. We rallied and closed above the 2024 high. And so soybean oil at 50 cents a pound now, 12 pounds of bean oil in a bushel of beans. The bean oil in a bushel of beans is worth about $6 a bushel. Some of the Trump administration officials indicated that tariffs are not sustainable and we need to de-escalate. And Trump and a number of the cabinet people met with the CEOs of Walmart, Costco, Target, and they just said this how devastating this was going to be to the consumer and to their business. Dollar, we'll look at that chart, very beneficial to our exports. We continue to see the dollar trade below 100. So what happened last week? We had a nice up week in the soybean market. Soybeans rallied above the March high and above the 200-day moving average. And so the next target on the long-term July chart is at 1098. And Bob, how long has it been since we closed above the 200-day moving average? I think it was probably last summer.
It was, yeah. We're pushing, getting close to about a year that it's been since
Okay,
we've been
yeah,
above that 200 day, and we don't really keep a really close eye on the 200 day, Al. It's we usually are in that 20, 50, 100 day ranges, but the 200 is always out there, and when we get to it, it definitely is worth watching.
yeah. Part of my day I end up watching CNBC, and I know the stock gurus that are watching the S&P index, they make a big deal out of the 200-day average. Like I said before, soybean oil rallied above the 2024 high. Corn prices closed lower last week, but well off the low. And I said key support in nearby chart is at 470, and the low early today was 469, and we're now at 477. So we went down to test support, and boy, did we find a lot of buyers. Also encouraging today that we're seeing the bull spreads again work as that July D spread continues to move in. And I think I talk about this every week over the last 3 weeks. Check your basis levels. We continue to see basis levels improve. So this has really been helpful. This is the US dollar weekly chart. You can see that since early December, since late December 24, January 25, we've dropped down from 110 down to 97.92. Last week we had a very minor rally back up. We're just about 10 ticks higher today. Longer term, my target is to get this down to 94 to 95. And that's where the dollar spent a lot of time during the last Trump administration. So I think it's realistic. And with the way we're piling on debt, now the dollar is going to become worth less and less over time. This is this bean oil chart. I don't often bring this up or watch it, but you can see as prices bottom sometimes, I talk about putting in a series of M's or W's, and you don't have to be too artistic to see how that's happening. And if we get up here and close again above 50, opens the door to go to 55. And earlier today, when bean market was down 9 or 10 cents, the bean oil was 30 to 40 ticks lower. Now, all of a sudden, the bean oil is up 62 points and beans are only down 2. So you really see a connection in between there. Sometimes beans will follow meal. Sometimes soybean prices will follow soybean oil. And today, soybean oil is the real leader. Looking at what happened last week, we had a big up week the previous week in corn. So this week we had a setback 479. The low last week was 470. The low today was 469. So you're getting down 469, 470. Pretty good support. We went up to 1058 last week. I like the fact that we closed at 1050. On the July contract, we closed at 1058. So prices of corn are quite a bit higher than they were a year ago now. Prices on soybeans are up off their bottom, but they're still about $1 a bushel less. So this is something that we're watching, something that we're looking at. The US dollar just a fraction higher, but certainly is a lot lower than it was last year. Now, what do we want to watch this week? I hate to have this at the top of the list each time, but I think it is true. What's going to happen next? I have read, I've not seen anything official that the Trump administration has said that we will be announcing some tentative trade deals or templates for a trade deal with South Korea and Japan and some of our other major export customers. So that would be good. I think once we get one or two of those deals done, the rest will start to come in line. 3 o'clock today, I think we're seeing corn planting advancing to 30% and soybeans getting up to 22%. The key states we're watching is Indiana, Illinois, and Iowa. I'm very aware of all the weather problems and planting delays that they're having down into southern Missouri, Arkansas, through Kentucky and Tennessee. Some of those areas, very tragic, the flooding that's occurring. But as far as crop loss, there isn't any yet because they have so much longer growing season. Export sales, look for another strong week of sales. I think the USDA will increase corn and soybean exports in the May supply demand report. And to me, it's not a question of if they are going to raise exports and reduce ending stocks, just how much more. And so I think we only need to export about 5 million bushels of soybeans a week to hit the USDA target. For soybean oil, we're already above what they projected for the entire marketing year. So these Thursday reports have usually been positive and given the market a boost. Chart update. Bobby, great chartist. You teach that in the academy. Let's just kind of go through the corn chart, bean charts, and tell me what you're seeing.
Yeah, no, I appreciate it, Al. So this is just more of your continuation chart. We talk about this a lot. The weekly side of things, it's a good picture going back. This gets us back into early 2023. You can kind of see where the highs were. You see where support's built. Here in the last couple months, you can see that we really have kind of just traded sideways, Al, after a nice rally from the late fall lows last year into early 25 here, and then the quick pullback with the tariff announcements and stuff, and now we're just in that sideways trading range, Al, and we really need to get the front month contract, which the May is going to be in delivery notice here, so we're going to see a lot less volume in that May contract for all the grain contracts actually, and going forward. So most of the volume has already shifted into the Julys, but on this continuation chart, as far as what we're looking for, we need to get back above 490 first. And then that 504, I believe, is the next target, 505 Al. So if we can get some momentum above those two levels, it really does open the door because you can go back into to the left side of the chart there, and you can see like we have some pretty good targets up there. You can get into that 550 to 575 window before we really find any other lines of resistance. So we just need to see something. We need, like you said, get one or two of these trade announcements where it's actually on paper and signed. That will help I think that will help the grain traders really be able to see what are the details, with these trade agreements. What are we trying to get from these other countries? And that will give them a good feeling for, okay, we've got two or three done. Now what can we expect? And that might be the news that we need, Al, to really
Mhm.
push above these resistance lines. And even on the support side of things, I think the little bit of bearishness is probably because we're off to a great start. Planting wise, phone calls over the weekend. These guys they've got more acres planted than they've ever got for this time of year. So I
One
mean
thing
it's
hurting the corn market too is the wheat. We're at or very close to contract lows, and
hmm
in some of the international markets now, you've got wheat trading below corn. So you can see in the Elliott wave basis, this is the first leg wave up. You've got a correction for 1, 2, and so longer term, if we could just turn the wheat market around, I think this would be very positive.
yes.
Here's
Yep.
the new crop. What do you think here, Bob?
Yeah, the new crop corn is going to be the one that's you're going to see the pressure there with this fast planting pace, and that's not unusual. I think that everyone kind of realizes that the American farmer we can plant a lot of acres in a little bit of time. And I think that's something in the last few years we've really seen that. So to see a little bit of pressure right now is I think maybe a little normal, which is okay, but we need to get into this May and June timeframes, Al, where the forecasts still show, below average moisture. And if that pans out, this corn market, we might be back up to that 469 and a half, 470 level resistance pretty quickly with a little bit of a weather scare because yes, there's a lot of acres out there, projected planting numbers and such. But we have to produce a big crop this year just to kind of maintain, Al. And if we have any type of a weather scare, that 470 target should be attainable rather quickly. And then we can start looking at maybe that 480, 83 level that was hard to get through in late February there. And then, the $5 mark is always kind of that psychological target.
Yeah, well, except that just from a cyclical standpoint, you can kind of see we're kind of coming at the ideal time period between now and Wednesday when we've got first notice day on the May contract for a low. Here's my favorite. Here's the soybean chart. Tell me what you see.
Yeah, so you can just see we're building a base, and if you didn't, look at the right-hand side here where you saw the prices underneath $10 and we're, peaking out near 1080 there. This base building that we've been in the soybean chart, this is pretty impressive. I mean, just on a weekly basis, uh, to see the market just trade sideways in this relatively narrow trading range of, roughly a dollar. So what's it going to take, Al, to get through these levels and to get above this resistance line? The talk is, and it has been for a couple months, that we're going to plant a lot of corn acres. Not much for soybean acres. What happens if we plant even fewer soybean acres than what we saw in the March numbers? And, what happens if there is a little bit of a dry spell that hits late July into August? I mean, the U.S. balance sheet could quickly change here, and it's going to be weather driven to a certain degree. But again, I think the wild card right now is how many acres actually get planted this spring. And we're off to a really good start. So I think a lot of the corn planters are going to roll until they can't, and that might be to the benefit of soybeans here.
It sure looks that way. Here's the new crop. What do you see there?
Yeah, the new crop is kind of that wild card with wanting to wanting to see where we get with the planting. Honestly, I think the traders are going to wait and really see. I think probably into maybe the middle of May, Al, is probably a good time window to see what we're going to get out of the planting progress reports every Monday afternoon. And I think from there, if you watch what the funds did 2 weeks ago, where they actually kind of surprised the market and they were big buyers of the soybeans. They were holding a short position and then flipped it to long. Now, last week was a little, much quieter positioning happening. But again, I think that was a surprise that caught a lot of traders off guard. So kind of pushed through to higher highs here than what we had seen in late February, which was good. Now, what's going to take to get through that now new resistance line at 1043? And I think it'll come down to planting progress.
I think planning progress, and also I think if we can put together some trade agreements. All the focus has been on China. China's buying most of their soybeans from Brazil. Now, if we can get South Korea, Europe, Japan, some of our traditional allies and key trading partners to ramp up their purchases of soybeans, having those agreements in place, I think would be what would do it. And then also keep your eye not only on the soybean market, but keep watching the soybean oil as well. So great job. That's why we have you teach the academy, the charting part, Bob. So what to do this week? I always like to give price targets to people. We want to have offers in above the market to make cash corn and soybean sales. The May-June bids on corn and soybeans are quite a bit higher than August, so I don't want to hang on too long. So the next price target, I have July beans up to 1058. Another sale of July corn, it goes to 518. So we're quite a ways away from this now on the July corn target, and we might have to lower it, but it doesn't hurt to have the offers in place. And I'll repeat this again. Be aware of the cash bids. Note the large price difference. Your May and June bids are much higher than your August, September bids. You have to have a plan. You can't, and hold and hope is not a plan. And so often when people are just, once you got your crop planted, we need to get the cash sold and really focus on getting a new crop strategy employed there. You grow the crops, turn them into cash, and do it again next year. And I get really concerned financially, farmers could hurt themselves if they hang on too long.
I know Al
That's it.
too. Al, we talked about last week just real quickly was if the volatility continues, those elevators, those end users, those buyers of bushels of grain, they're going to just push out and start bidding against the new
Yeah.
contracts. And they want to avoid that volatility. So again, if we can get some deals put together here in the short term, that we might prevent that from happening as far as the elevators kicking out to new crop bids right away midsummer. So that's we just want to mention that could be a possibility
Yeah.
that we want to avoid that if we
Yeah.
can.
Thanks, Bob. Yeah. A few years ago, I know all of a sudden in June, they just rolled all the bids out to new crop, and in 2 weeks, the cash market just cradled. And what we're going to think I see in the next few weeks too is if we do get some trade deals put together and futures rally, watch to see if the bids widen out on that rally. And so that could call it fake news or whatever you want, but if we get a big up in the futures market and your cash doesn't follow along, as a farmer, that's a big caution sign. So if you want to give me a call, please call. If you have marketing questions, 888-345-2855. Email me. I'm doing a little traveling later this week, but I'm usually very good at getting back to people within 24 hours, and don't hesitate to call in questions. I enjoy talking with a lot of farmers from all over the Midwest and have a lot of long-term customers and friends that farm in Iowa. So Bob, thanks for your help. And again, thanks to the Iowa Soybean Association and their staff. We hope you like these weekly programs, and we look forward to next Monday. Thank you.